Hello, everyone, and welcome to the Solo to Entrepreneur Show. You are with me, Lorraine Chai. Today, I've got a treat for you all. I've got Adam Coffey, a well known operator and investor in the private equity space. Now, Adam is also an author of three best selling books. And as I said to Adam just now, this was one of my favorite ones. He's known as someone who builds a career around acquisitions and exits and reinventions. So what I respect about Adam is he doesn't just talk theory. He lives the hard parts, right? Buying companies, integrating them, learning about setbacks, and then doing it again and again at a higher level. So multiple sales, right? As what I've learned from the book. So welcome, Adam, and thank you for being here with me today.
Well, thank you for having me. Hello to all your listeners out there. I'm excited. Let's do this. Let's help people succeed.
So with your backdrop, let's start with the backdrop, right? Because people see you and they're like, "Ooh, that's like really interesting." You come from a history of where you were with the military, and then now to where you are at the moment in doing multiple exits, so to say, which people don't usually talk about. So, How did that journey start from someone such as yourself, studying from the military, to going, you know what, this is the route I'm going to take?
Yeah, well, first of all, I'm older than I look, so
That's
I'm
good.
I'm making up for all those times I was in my 30s, and if I was in a bar, I was getting carded because people thought I was so young, and so I don't look young anymore, but I'm a lot older than I look. So, I think life is a set of experiences. For me, there's really a handful. So, coming out of high school, 17, went into the military. Military taught a young version, Adam 1.0, about teamwork, discipline, leadership. Those were kind of the three core concepts that I got, as a non-commissioned officer in the military. And I parlayed that into an engineering degree and an engineering, background. And engineers are meticulous planners. I became a pilot, and pilots don't take off unless we know where we're going. And that was a useful skill in deconstructing kind of a 5 year private equity hold period. I start with the destination in mind, and then I deconstruct the journey, just like a pilot starts with a destination in mind and then figures out how much fuel I need and what the weather is going to be en route and where my alternates are. And so and that was a useful skill. Then I took all of that to General Electric, and it was during pre-tech, before tech ruled the world. And Jack Welch is the world's most admired CEO, running General Electric, the world's number one company on the Fortune 500 list. And the company's growing so fast, it's doubling in size every 3 years. And it was Jack and that era that taught me how to run a business and created the executive version of Adam. And then, phone rings. I answer because back then we answered the phone, and we didn't have all the technology around us, and recruiters recruiting me, as was common. Everybody wanted GE leaders and GE talent, and talked me into going and being a president and CEO of a company for the first time. And I didn't know what private equity was. It was a private equity backed middle market company, and I left GE because I was pursuing money and title. I wanted to go be a CEO, wanted to get to the corner office, and that, I talked to my GE mentor, and he was a former Cleveland Browns professional football player, very motivating guy. Mike Martin, hello to you out there, wherever you are in life. And I remember Mike saying, "Adam, once a president, always a president. Get the hell out of here and go be a president." And until you go do that, GE won't see you as the president material because of the way you worked your way up through, kind of the ranks. And there's 1,000 general managers, and it's a giant company, but it's like, go be a president. So I did. Best advice I ever got. Left the Fortune 500 world, went to middle market, started building companies for, ultimately became private equity. And so then I spent 21 years as a private equity backed CEO, building three national companies for nine different private equity firms, built them, sold them multiple times, and made billions. Did 58 acquisition, 2.5 billion in exits. That what 2.5 billion wasn't mine. I got a piece of that, as the CEO. I was always a minority shareholder, but great run. And then I got bored. I just really got bored. And I had been speaking at UCLA in the executive MBA program, and I still do that today. I've been doing it for 15 years now, something like that. Love teaching, love giving back,
Mm.
love educating the next generation of entrepreneurs. And so at some point in life, it was less about money and it was more about why am I here? And how can I use what I've learned to kind of create the legacy, to build, to build, help others build success. And so I kind of, I'm making a lot of money as a CEO, but I'm bored stiff, looking for a different challenge. I do a lot of education, teaching, mentoring, not making any money. How do I flip the script? And so I just hung up my CEO cleats, said I'm done being a CEO. I founded the Chairman Group, and now I've dedicated kind of the rest of my working career to helping people succeed. So I do that through podcasts. I write for Forbes. I've been writing for Forbes for 5 years. I do that through my books. People don't know always, but I donate all my royalties to charity. So I use my book royalties to fuel some of my philanthropic work. I actually give more than I earn in the books, but it's a substantial, amount. So the books were about helping people, but everything took me a little bit deeper. And, that led to seminars, and seminars led to my online academy that I teach. And so I'm working with over 100 companies right now on 5 continents, many different industries. I'm an investor in 52 companies. I am doing 19 buy and builds right now in multiple industries and having
And these are
fun.
all
So I
within
reinvigorated.
these are all within the US, right? Or is there some that is
No, globally,
international? Yeah.
globally, clients everywhere, clients all over the world. Have a large following in Australia. I work with a ton of different family offices and a bunch of successful entrepreneurs, in Australia. God bless Australia. They make all of my books #1 bestsellers first because the day always starts in Australia. And so markets open, the
Yes.
books start selling. I become a #1 bestseller in Australia, and then it works its way to the US. And so a lot of clients in the US. I mean, it's a giant market, but a lot in Europe too, and all over, in Africa and in South
So
America,
there's
and just
something that you don't know about me. I'm known as an Australian that has an American accent. So I first heard about you when I was back in Australia. I have all your 3 books with me. Like I've got the this is my favorite, and I've got this. But
yeah,
one of the other book, the private equity one, is still back in Australia. So
yeah.
funny you
Well,
touching base with Australia. Yeah.
yes. Well, I had this unique distinction. There was a time in Australia, so I've actually written 4 #1 bestsellers. And there was a time in Australia where my 4 books were #1, 2, 3, and 4 all at the same time. And so a book that was 5 years old was still, top 4. And, it's like I had the top #1, 2, 3, 4 slots in Australia at the same time. I was proud of that. I don't write fiction. I love fiction, but I don't know if anybody can say that they've held, the 4 top
Yeah,
spots in
no, you've
Australia
done
at
better
the
than
same time.
me because I'm self-published with 28 educational books, and I do have like a couple of them that are bestsellers, but not as massive as yours. So
Well,
yeah,
I thought
I'm
that was
I'm
cool,
learning there. Yeah.
and again, love
So
Australia and have lots. I got my chance, first chance to come visit and speak on a stage last summer, and had a blast, and so was glad to be able to come and start meeting people, in
yeah,
Australia rather than
so
meeting them when they were here. Yeah.
exactly. So out of all the books that you have, which book was your favorite book to write, and why?
So Empire Builder is my personal favorite, but I'm going to tell you that they all have a place. And I'm like the Star Wars trilogy. So you started with episode 4, 5, 6, and then they went back to 1, 2, and 3. If you read my books, the third book is Empire Builder, which is the one I tell people read first. And then, read the private equity playbook, and then the exit strategy playbook. And, because we're going to build an empire, you're going to sell it to private equity, and then we need to exit. So it's kind of like that's the logical order, but not necessarily the order with which they were written. But I think Empire Builder was my personal favorite. And the private equity playbook is 2 editions. So there's a second edition, which is actually much more expanded than the first edition. And I love that one too. But it's funny because it has so much different content that the registrations and ISBNs you get from the Library of Congress over here are different. So you can't like take all of the thousands of reviews that I've got on the first edition and apply
And
them to the
transfer,
second
yes.
and retire the first edition. So they both live at the same time, and frequently, both in the top 10, it's more frequent for the first edition to be number one than the second edition, and the second edition to me is the better book. And it has the benefit, it was the first time author, first time writing, and then fourth book released, which is why there's four number one bestsellers, because they're different catalog numbers, and each one of them has been number one. And so it's been fun. Private equity, a lot of the big private equity firms use my book, or books to educate incoming associates and to recruit, on college campuses when they're looking at interns. So even private equity is using my books to teach kind of their next generation of private equity, players on their own staffs and teams. And so I've been blessed. I think it was there's a little luck involved. I wrote the right book at the right time.
Mm.
A lot of people write business books, and your hope is really, can I break even? And I use it as an authority builder. And in my case, my books have been commercially successful, and that's not always the case, for authors. And so, it's funny because in just the last year, it's been so frequent. I'm sitting on a cruise ship, a Walt Disney World cruise ship in the middle of the Caribbean. I'm sitting in a bar having a drink, in the Haunted Mansion bar, on their ship. And somebody walks up and says, "You're Adam Coffey." And I'm like, "Yeah, I guess I am." And so it's like people are starting to recognize me, which is a little weird, but the books definitely have made their way around. I'm blessed, and I really do my best to try to help people succeed. Books are a piece of that. So I'll keep doing them.
I do have people that are from the military that listen to my podcast. So from you, from that transition, right? Was it
Yeah.
automatic for you, like incorporating or transferring those skills that you've learned from the military, or did you have to like eventually connect the dots between those
Well,
skills?
so it's a great question, and I'll tell you that ex-military people, there's a few things you can say about them. Number one, they're going to show up on time. Whatever the event, whatever the requirement is, they're going to show up on time. That's the discipline part. And I'll tell you, when I was in GE, I'm working my way up through the management ranks, and I'm battling the Harvard MBAs of the world. Wharton, MBAs, people who are much more educated than I was. I came up through street smarts in the world, of let's call it low level, in the military, and cobbling together an education along the way. But the work ethic, you're not going to outwork me. I told myself there are people in the world who are smarter than me. That's always going to be the case. But I'll get up earlier. I'll work harder. I'll work longer. I'll go to bed later, and I won't stop. And the military teaches, a person, if you're faced with an obstacle, you don't stop. You
Mm.
figure out how to go over, under, through, around. It's like, failure is not an option. So for me, the mentality part, the discipline, teamwork, leadership, and the tenacity and the ability to never be acceptable for you to lose or to be defeated. It's like, I'm going to go down swinging, I'm going to go down trying, and I'm either going to find success or I'm going to crash and burn. And there is no in between. I'll keep on getting back up and trying. And so I think that those kind of softer skills around leadership, tenacity, drive, those were kind of the key ingredients that then when I transitioned into business helped me take whatever I learned, in the business world and take it to a different kind of a level just simply because of those base skills. So I tell people, if I never served in the military, long, long ago, I never make CEO. I literally held every job a person can hold on an organization chart, and I worked my way up from private E1 in the United States Army, the lowest rank of any in the entire world. I look up, I see bubble gum on the bottom of somebody else's shoe. And I then worked my way up, got out of the service, got through, and I was a guy in a truck. I'm a technician, I'm an engineer, I'm fixing CAT scanners at night in hospitals in Western Michigan. And, in the snow, and me and the deer at 3 o'clock in the morning are jumping around on the roads. And I held every job on an org chart until I got to the top, CEO. Now I'm chairman of the board of multiple companies, and so I've gone up the board charts as well. And so I think every lesson learned along the way feeds back to the military base: discipline, teamwork, leadership, tenacity, the unwillingness to accept defeat.
So what about us people like myself that has never been in the military? What would your advice be for those business owners out there in terms of growing their skills in
When
being
you get up
disciplined?
in the morning and you walk into the bathroom and you look in the mirror, you look at yourself and you ask yourself one question: why not me? Why can't I be the next successful business builder? Why can't I find my way to the first million, to 10 million, to 100 million, to a billion? Why can't I have a nine-figure exit? And, success starts with a mindset that
Mm.
I'm going to do whatever it takes. But you know what? A lot of people want to mail it in, and they want to just have success be handed to them. And that's not how the real world works. You have to put in the reps. You have to put in the work. And so I have a lot of friends who are very wealthy people. I hang out with a lot of people. I've been in a lot of billionaires' houses. And I sit in there and I'm looking around and I'm like, the paint's peeling, the drapes are dirty, there's marks on the baseboards, and I'm like, what the hell? It's like I thought billionaires were perfect, and they were smarter than me, and they were, but that's just not the case. Success, you can be success and still live in a dumpy house and be a billionaire, and you can still, need your walls painted and your baseboards fixed, and your kids are kicking a soccer ball against the outside wall of the house, driving you insane. It's like all the same stuff that happens to regular people and is a part of our world is also a part of their world. And so that got me thinking differently about, okay, success is possible for anyone. Anyone can be successful. They have to believe it, and then they have to do the reps and put the work in. So you may not have, call it military discipline, but you can create the discipline within yourself that starts with, I am going to be successful. I'm going to learn what it takes to be successful, and then I'm going to work harder than anybody else, and I'm going to make it happen. And if I get knocked down, I'm going to get back up. And I learn more from getting knocked down and making mistakes, I think. But I wrote my books to try to help other entrepreneurs erase, my mistakes, and so that they could be much more productive. And I tell people, my latest thing I'm doing, this Empire Builder Academy, that's the 61-year-old me with billions of dollars in exits teaching the 31-year-old me with no exits how the hell to play the game, how it's done, and cut through all the noise. And somebody was joking with me yesterday. They were a UCLA executive MBA grad, and so they had seen me in a classroom, and they were asking me, "Can I get a discount on the academy?" And I said, "Are you kidding me? You went to UCLA, you paid 200 grand for an executive MBA? Hell, if anything, I'm raising my prices for you, brother." And we were joking, but it's like, I would pit spending, a couple of days in my academy with any executive MBA course on the planet, and I bet you learn more actionable information from me, because the 61-year-old me, if I could go back and be the 31-year-old me, the sky is the limit to how far I would have been able to go. And so I'm slowing down from a career perspective at this point. Still work a lot, but I'm mindful that, hey, I'm in my 60s now, and I don't need to work, and I don't want to work thousands of hours. I still have I have a 13-year-old home. She's in cheer. I'm a cheer dad, and it's like I want to be there for her. I enjoy traveling. It's like there's a lot of things. I'm starting to enjoy some of the fruits of my career. But at the same time, it's like I want to be helpful to people, but I want to be helpful to people in an impactful, you know, efficient amount of time. And so that's what I work on now, and I'm loving it. I get so much excitement when one of my clients has an exit. And I
Mm.
don't care if it's a seven-figure exit, an eight-figure exit, a nine-figure exit. And so over the last 3 or 4 years now, I've had somewhere around 500 million in client exits, the people that I've worked with. And I get so much fun out of seeing life-changing exits for people. I'm working with one guy right now who's built a company, and he's looking at about an 85 to 90 million dollar exit. And I'm talking to him, and I'm like, you realize that your life is now secured. You are not just in the top 1% of all people on the planet. You're in the top few tenths of 1% of all people on the planet, and you're in your 30s. And we're not done yet, and we're going to roll over, 30, 40 million, and then we're going to go do another round, and you're going to get another payday in, another 3 to 5 years for another nine-figure number. And it's like you're a guy who's going to make 2 to 300 million dollars over the next 10 years. You're going to be 40, 41, and you're going to be 300 million, in net worth. And this is an exciting time for this person. It's like I get so much juice out of watching that, and
So
the
not a lot
coaching.
of people cover the basis of there is a possibility of multiple exits in a singular company. Do you want to explain about that? Because people think, okay, I'm just exiting and that's it, done and set. So with the multiple exit, what does it look like for someone that wants to retire in 60, let's say?
Yeah.
It's like I'm exiting at 60. Is there a possibility of beforehand is the question.
Yeah. So the short answer is yes, but to unpack it a little bit, a lot of entrepreneurs think I'm going to put my life's work and effort into building this company. At some point, I'm going to sell. That's going to fuel retirement, and I'm going to walk away. And there's nothing wrong with that. But I've been trying to educate people that there is another path.
Mm.
And why sell a great company once if you can sell it twice or three times, or my personal record's five times? And it's like, because what happens? You sell your company, you get a wheelbarrow full of gold. You have probably a 5-year non-compete in your former industry. You can't go start that up. You go home with a bunch of money, you pay taxes, you get bored. And so you start something else. And oftentimes, next adventures are not as lucrative as the first. The whole profile, the DNA has changed. And so it's like, why figure out what to do? I tell people that, so I bought 58 companies from entrepreneurs. Most of them thought of the business exit as the end of the road. I see it as the first rest stop on the wealth creation highway. So I'll give you a great example. Last company that I built, I started with a platform, which is a little bit bigger company than the ones I'm going to buy, and I bolt on the ones I buy onto it, build something big and special. I bought 8 companies. Well, the first company I bought with that platform, the guy sold me his business for 16.4 million, and he wanted to take all 16.4 home, retire, and go away. I'm like, nope, you can't. I'm buying the relationships that you built. I need you to have investment and skin in the game. I need you to help me, build that next chapter. So I'm not letting you go. I'm putting handcuffs on you. You're going to roll over. So eventually, he takes 12 million home, pays some taxes. He's now a wealthy guy, by anyone's standard, and he rolls 4.4 million forward. 27 months later, after buying 7 more companies, we sold the combined company, and what I was buying on average for 5 times, because they were plentiful. There's lots of small companies. There's not enough buyers, and the multiples stay fairly low. I sold the combined company then for 14 times earnings. So for every dollar of earnings we bought and paid $5 for, turned around and sold it for 14. That's $9 of profit to all shareholders. He was a rollover investor. He's a shareholder. It wound up being a 4 times multiple of invested capital. So his 4.4 million that he rolled forward times 4 equals 17.6. So his first exit to me, 16.4. Subtract 4.4, roll it forward, it becomes 17.6. Well, 17.6 is bigger than 16.4. In 3 years, the guy made $30 million selling a company, the same company that he continued to run, that he would have been totally happy selling for 16.4 and walking away. And so that is the kind of example. He then rolled over another 5, waiting on the next bite of the apple. He's not there. I'm not there. We both got millions invested, and we're waiting to see what they wind up doing with it. But if they were to get another 4 times multiple, like I did in 3 years, well, then his 5 would become 20.
Mm.
20 is bigger than 17.6. 17.6 is bigger than 16.4. The guy will have now made $50 million in about eight years. So on a company, he would have been happy selling for 16.4. So what I try to tell people is that a lot of entrepreneurs, and I think it's fear of the unknown, tell me, Adam, if I'm not the controlling shareholder, this company doesn't work. They're a guy who's built a
That's
10
right.
million, $20 million company. I built billion-dollar companies. I start where you peter out, and then I put them together and I build them, to billion-dollar exits. And so there is life after your, tantrum and your little demonstration of your prowess at being a business builder. And then I remind them that Elon Musk and Jeff Bezos, the world's two richest people, only own 13% of their companies, and they still run them today, and they have a board of directors. And although you could argue, well, they can't be fired, well, there's plenty of other successful people that could be fired, and so it's like, what are you afraid of? If you still got game, if you believe in your company, you can be a minority shareholder, rollover investor, and then invest alongside the world's most sophisticated capital stack on the planet and get help from them and start using other people's money. And besides, I'm diversifying risk every time I'm getting a payday. And since private equity must sell a company, they have a 10-year fund life. They have 6 years to invest the capital, average hold period 5 years. So about every 3 to 7 years, average 5, whatever is bought by private equity is then sold by private equity, which means you got liquidity events that are going to keep coming. And if you work for 20 years, it's possible to get as many as 7 paydays in about a 20-year period. And so I got 6 and 21. And so you can actually kind of keep going, keep your passion, because there's another problem entrepreneurs have, and that is as they get older, they know there's risk. And
Mm.
so they start making bad business decisions. They stop investing for growth because they know that there's risk out there and they're getting older and they don't want to mess up this thing that they built that has value. Problem is when I do that, I stop growing. And then when I'm 60 and time to sell, I don't have a growth company anymore. I've got a stagnant company and it's not worth as much. And so I actually hurt value. But if I take some chips off when I'm younger and I'm diversifying my wealth, then I'm hedging against an unknown certain future. Planes fly into buildings, wars starts, pandemics happen. So many horror stories I could tell you of companies that were decimated by, geopolitical or forces outside their own control. And yet, if I've diversified, I'm safe if my company crashes. But if I stay in and keep invested, even if it's as a minority investor, I'm now using other people's money. I'm using the private equity firm's contacts and relationships to raise debt. We start cranking up an M&A engine. We get more sophisticated as we get bigger, and I can sell that company multiple times. And so I would recommend from an entrepreneur perspective that we look seriously at, should I leave? Should I stay? Should I roll over and become a minority investor? And for me, the career answer has been yes. Anytime I rolled over money, here's the actual numbers. My worst return was twice my money, 2x my money. My best return was 11 times my money. I have never lost money in my entire career investing behind private equity.
Mm. So given that most setups never reach 100, sorry, a million in annual revenue, under what conditions would a private equity firm invest in, let's say, a pre-revenue or an early revenue startup?
So
Let's say, let's touch base into technology field since we're in the whole era of AI and stuff like that. So, what specific criteria would make it investable, and what deal
yeah,
structure would
so
use?
generally speaking, companies that have under 4 million in earnings, so you could be a company with a million in revenue or 500,000 in revenue, you have a potential to still play this game. Chances are you would sell as an add-on acquisition to a larger company called a a strategic buyer who's rolling up other little companies. So like when I told you I started with a platform, I went out and bought eight small companies to create one bigger one. Well, those eight companies were probably too small to be platform companies of their own, which is a company of significant size and scale that a PE firm could back. But yet I need add-on acquisitions in order to grow the empire. So that person I just did that soliloquy around his returns, that company was too small to be a private equity backed platform. But as an add-on working with me, he still gets the same 4 times multiple of
Mm,
invested capital when the bigger company exits. So we can build a good small company or an attractive small company. You talk about tech. So sometimes tech companies don't ever generate real revenue or profits, but sell for big numbers because they've perfected some piece of technology or code that somebody bigger says, that's got value. I need it and I want it and I'm going to pay a lot for it. But chances are that company doesn't necessarily become a platform. It's I'm buying the technology, I'm putting that company into my company. So we can still be quite small and still be a part of this game. But generally, what I tell people is if you're 4 million in earnings, not revenue, in earnings are up, you're a platform. You're ready to play the platform game. If you're smaller than that, chances are you're better off being an add-on acquisition to a larger company that's assembling a collection of companies or capabilities than you are being a platform. There are people out there, and some of them are quite successful, who buy small companies as platforms. But those generally are not a traditional PE firm that actually is out raising a 10-year fund from multiple investors. This is probably people who were in the game that were successful, made a bunch of money, and now it's kind of friends and family money. I got 50 million or 100 million, and I've got to started my own PE firm. But they don't really have traditional limited partners, and they're not raising a traditional 10-year fund. Those people are out there. Some are really good, but some are just as likely to suck the life out of your business as they are to have the resources that are required to help you build to the next level. So I always counsel my own clients, if you really want to sell, and I've had plenty of these, and you're, a million in earnings, had one sell not too long ago and we got 8 times for it. So the young man made $8 million, his first payday, first multimillionaire in his family's history, and it was very important to him. God bless him, that was the number. Um, but he was kind of on the small side. He
mm,
became a platform while we were of a small one of these firms I'm talking about. And I told him as we were going through diligence, I'm like, you do see that this could end badly. Yep. I'm like, and if it does, are you still okay putting the 8 million in the bank? Yep, I'm okay. It did go bad, but he did get his money, and that's what he wanted. But we did see it coming. So sometimes things work out, sometimes they don't. But generally speaking, it's like small companies can get involved and play this game too. And I also tell people that you don't necessarily have to be with a private equity firm to do this. So I work with small entrepreneurs all the time who are out buying other small entrepreneurs companies and adding them to their own. I'm working with an accounting firm right now. She's been a client of mine for a few years, and she has grown tremendously organically, but we're still talking she's small. She's now up to about 3 million in revenue and a million in earnings on her own merit. We did the first acquisition. She's buying $750,000 of EBITDA of earnings, and she's paying 2.5 million for it. Over here, we have this thing called the Small Business Administration, and you can get SBA government, insured loans to help people. Most of the time, they require down payment. In her case, They didn't even require a down payment. She had to put $5,000 down. She got 2.5 million from a government insured or backed loan product through a bank. And she's just done an acquisition, which has now taken her up to the next level. Now we're out looking for more. And so individual entrepreneurs can do the same thing that I'm doing on an institutional scale with large capital providers. We can do it on a small scale because it works no matter who we are. Small companies are plentiful. They trade for small numbers. Good example, in the United States, there's 34 million small companies. There's only 3 to 5,000 companies on the entire planet that have $1 billion in revenue. So as we get bigger, we become rare really fast. 34 million small companies, and only 7% ever get to 1 million in revenue. And only 4% of those ever get to 10 million in revenue, and only 5,000 on the planet have $1 billion in revenue. So as we get bigger, we become rare. By being rare, we're rewarded by selling or trading for a higher multiple of earnings. So companies I was buying in my last industry for 5 times, at scale, I sold at 14 times. And so for every dollar of earnings I bought, paid $5, I got $14 when I sold that same dollar. I keep nine of that is the difference or the spread, the arbitrage. And that's where the profit comes for me, the management team, and the private equity firm. We can do the same thing as a small company independently on our own. That's what's beautiful about it. I teach people how to do that, every day, and there's plenty of people I work with who are doing it.
So you've been really open about the reinvention, right, and the pivot level of your growth and how you help your clients. So what's a moment that looked like a failure in real time, but later become a key advantage to how you buy and lead companies?
Yeah. So, I was a turnaround guy at GE, and I know how to fix a broken company, and every platform I started with as a CEO had been in business for 40 years before I got there, and it was broken when I got there. So I had to effect a quick turnaround and then do the buy and build the business and sell it for high multiples. So I'm a turnaround guy, and I'm an M&A guy, and I'm a buy and build guy, and I work with PE firms for decades, and I work with a lot of them today. And I'm going to tell you, listener, don't buy fixer-uppers. Only buy good companies run by good people. And when an entrepreneur tells me they're looking for a deal, I already know they don't understand how M&A works. They don't understand where the value creation comes from. The value creation comes from simply getting bigger. Small companies trade for small numbers, bigger companies trade for bigger numbers. The value is created simply by buying a bunch of companies, putting them together, and getting bigger. I have to integrate them. I have to get it growing organically and improving margins. There's a lot of work to do. But the magic doesn't come from buying something at a below market price that's broken and then spending all my managerial effort trying to fix it. And then I'm going to create the value because the earnings will go up. Well, I'd rather just pay fair market value for good companies, put them together quickly, climb the pyramid, get bigger, and harness the arbitrage because that's where the value comes from is the getting bigger, not the fixing something. And so it's easier to put companies together that are high performing, that are led by good people, that have strong cultures, that customers love, and customers keep coming back to. I once bought a company that I shouldn't have, and that's my T-shirt of the day. I'd rather regret not buying a company I should have than regret buying one I shouldn't have. But even me, on occasion, makes a mistake and I buy the wrong company. And at the time I bought it, it was less than 5% of my revenue, and it created 80% of my management headaches for the
Mm.
next 3 years. And was it worth it? No. Did we eventually fix it? Yes. I'm a turnaround guy and I don't stop until it's fixed. But moral of the story is at the same time I'm spending all my headache and energy fixing one, I bought seven more that were good. And that's what created the value, not the one that I fixed. The seven that I didn't have to fix is what created the value. And so, moral of the story is we have to be really disciplined if we're going to play the M&A or acquisition game. Something else I'll just mention why I'm on my thought. It's on my thought track. A lot of entrepreneurs think I need to start something. They think I need to just build something that's never existed before. I got to create the next cool thing in order to be successful. Well, right now in life, baby boomers are retiring, by the millions. And as we age out, I'm the last of the baby boomer generation. As we age out, many of us have built successful businesses that have beat the odds already. We've beat the startup odds. We've got the million in revenue. Maybe we've got the 10 million in revenue. We've got a history of earnings, a track record of growth and performance, and I need to go because I'm aging out. And so, right now is the largest wealth transfer in human history of all these great businesses that are owned by entrepreneurs who need to retire. And I can swoop in as a young person who wants, or a mid-level executive who wants to get out of the rat race and instead of working for somebody wants to own something, because that's where wealth is really generated in the world, is by owning a business. And so instead of starting something new and struggling to be one of the 7% that gets to a million in revenue, I can buy a company that's already successful. And I can use the cash flow that that company is generating to pay for the loan to buy it. So I would even tell people, why be a startup when there's so many great companies out there that are for sale from retiring
It's like,
people?
why reinvent something when there's already pre-existing that are ready to be
And I know
given?
it's because everybody
Mhm.
wants to be sexy. I want to create the next AI thing, or the next, the next Uber or Amazon. But you know what? Buying a boring plumbing company, or an HVAC company, or a roofing company, or a pest control company. There's so many companies and industries out there that are boring and make a ton of money. And so it's like I don't even have to think of in terms of high tech, although I certainly can. I built a $1 billion commercial laundry company. Laundry's not very sexy, but everybody in the world has to do it, and millions of people were doing it in my laundry rooms. And we used technology, and just invested heavily in technology to kind of change how the world of commercial laundry and laundromats, work. And so I can be high tech in a non-sexy industry. Satya Nadella, gave us an award one year because of all the Microsoft. We were working on BI 360 and business analytics and machine learning, and we were doing all kinds of cool stuff decades ago. And we got given an award by Satya Nadella, and then he was going around the world giving speeches with a commercial washer and dryer that we cut in half and had neon lights inside, and they looked really cool. And it's like you can be in a non-sexy industry, deploy technology, and have great outcomes. I sold that company for $1 billion. And so you can do all these things, but you
Mm.
don't necessarily have to create something from scratch.
So I need to insert this question, and this is with somebody that is interested in getting private equity to help their business, right? What would you, in your opinion, what's your opinion between approaching a private equity or a few private equities versus going to Shark Tank?
Well, so Shark Tank is about the world of venture capital. It's about startup, and so if I am a startup, private equity is not going to be interested in me. So venture capital is a subset of private equity, but they're investors in ideas, and they'll make many investments, and most of them will flame out and fail, and they're going for the 1 in 10 that actually creates enough return to create return for their investors. But the largest category of private equity capital is in what's called a buyout fund. And a buyout fund, by its very nature, buys controlling stakes in mature companies that have a history and track record of revenue growth and earnings growth. And so, by nature, a buyout fund doesn't do venture capital investing. Venture capital funds do. So, if I'm building, I think the biggest, early when we first started, I talked about being a pilot and deconstructing a journey. Most entrepreneurs that I work with don't have a destination in mind.
Mm,
They don't know when they're going to sell, how big they're going to sell, what revenue and earnings they're going to be at. They don't even know where private equity or other companies are buying. Like, how big do I need to be? What kind of firm am I going to be talking to if I get to a certain size? And so I start by saying, everybody out there needs a destination in mind. We need to get educated. We need to understand that, we start with the end. I'm going to sell it this size, this much revenue, this much earnings. I'm going to be this old, and I'm here today. That's where I'm going to get to. I want to do it in 3 years or 5 years. And so I have to have that plan that takes me where I need to be. And then I can focus on execution. And if I know where I'm going and what I'm building to, every decision I face is so simple. Does this help me get where I need to be? Yes or no? If it doesn't, it's distraction. Keep on growing. If I don't know where I'm going, I take off with no destination. I don't know where I'm going. I just fly around in circles. I don't know where I'm going. I waste time. I waste fuel. I waste energy. And in life, entrepreneurs, we have a finite amount of career. We might, in our 20s, we haven't figured it out yet. In our 30s, we started to get focused. But if I'm going to work until my 60s, I got 30, 35 years to do something meaningful. If I don't have a destination, I'm just spinning my wheels. I may find success, but I take a circuitous route to get to success. If I know where I'm going, I can chart a course that's more of a straight line. And so I can be much more efficient with time. But I tell people, I start with, where's the destination? What are we building to? Then I want to build the strategy or the value creation plan that takes my business from point A to point B, break it down into I'll call it the buckets of growth, or margin improvement or M&A. It's like, what are the value creation levers that we're going to pull on to make this thing happen? And then who owns them? Who owns them in my organization? Am I a solopreneur and I own them all? That's fine. I have a value creation plan. I'm a single guy, without a bunch of employees. But I could have 5,000 employees, 50,000 employees, one employee. I still need a destination. I need to break it down into actionable, activities that I use measuring systems to track my success. There's only four ways that I've ever found to grow a company's revenue. I can raise price. I can sell more, which is increase volume. Price, volume, pivot, tiering. Pivot, is creating new revenue streams that are adjacent to my existing revenue streams. Tiering, I start selling you an S-Class Mercedes, an E-Class Mercedes, a C-Class Mercedes. I capture more market share in my core business, which for Mercedes-Benz would be to build automobiles. And so it's like there's only so many ways I can engineer growth of top line. And then I've got all the margin improvement. I want to get more efficient with revenue, servicing revenue as I get bigger, and that leads to the profit growth. And then I've got M&A, and it's like these are the levers of growth no matter what company I'm in, what industry I'm in. And if I'm going to be a seller, so I'm 57, I want to sell at 60. I don't wake up at 60 and then start being a seller. I
mm.
want to start getting my company ready, get my financial house in order. Before I sell my company, I want to do my own sell side quality of earnings. I want to understand what buyers are going to see when they look under the hood. I'm going to build a data room. I'm going to be ready. I'm going to be as equipped as a seller can be on the day, I start actually reaching out to brokers or investment bankers, depending on my size, to represent me in a transaction. I'm going to be ready. And most entrepreneurs are not ready. Phone
So
rings.
yeah, I'm gonna bring it backwards, right? Because you were from a soldier to a CEO, and now you're doing a lot more than what you initially thought when you were back being a soldier. So with that growth for yourself, how I'm assuming you had help along the way, like mentors, coaches, advisors. Um, how important is it to have that in your
Absolutely.
growth?
So, and I think in today's world, we are all much more open to the idea of learning from others, having coaches or mentors, peer groups, things like that. I think we're all more open to that today. As I was growing in my career, as a soldier, I had soldiers above me and people that I looked up to and I admired, and I emulated their leadership skills. I get to business, and there are business leaders that I admired and emulated. And at places like GE, they very much had mentorship, within the company. They recognized that the key talent within the organization needed to be nurtured from the lowest levels to prepare it for growth, and in a future GE down the road. So I've always been a big proponent of continuing education, of investing in employees and their future, and in seeking advice and counsel from others and surrounding yourself with people that are more successful than you, not less. They're not here to build your ego. You're here to learn from them how to get to the next level. And I think people are much more open to that. And I'll admit that, when I was in my 30s, there was some, I call it the accidental arrogance of success. When you're a rising star in a Fortune 500 world, you get a little arrogant. I got this. I don't need consultants. I don't need mentorship. I don't need none of that. I got it. And somewhere along the way, you recognize the value of those things and you change your mindset. And that's called maturity. So at
Yeah,
some
I
point,
was
you
brought up
mature.
with entrepreneur parents, and I was brought up where you never show your weakness. You always try and act as if you're the expert in your field. So even though you're not comfortable or not 100% in certain areas, you just don't show it. You don't ask. You're not vulnerable, right? But it came to a point where I know it could go beyond where it should be. And then it's being open, as you said, right? This generation, they're more open for the assistance and the help versus back in the day. Not saying that
Yeah.
I'm any older or any younger, but yeah, it was
And that's
generation at
why
that time.
I use that analogy a lot. The 61-year-old me educating the 31-year-old me. We learn so much in life as we grow, as we get older, as we get reps. And you know what? AI can help, but it can't replace, kind of the human intuition that, the judgment calls that have to get made, along the way. I'm at a crossroads. Do I keep this person? Do I fire them? Do I hire someone new? Do I not? Do I take this job or do I stay where I'm at? I mean, we all come to crossroads in our careers. We use the tools that we have, which include today AI, and I use AI as much as the next person does. But at the same time, though, I look at it as an augmentation of my own knowledge and my own skill. And we have to be careful, and I was at a conference just recently this week, and people, we were talking about AI, and someone said, are you still seeing AI mistakes? Because AI is getting so much better. And I said, yes, math. If I tell the best picture generator on the planet to give me 16 trucks with 16 zero-turn motors or mowers and 16 blowers and 16 weed whackers and 16 crews of two people each standing in front of their truck with the equipment behind it, it comes out and it's like, okay, I got 16 trucks and I got 16 guys or 32 of this and 85 of that. And it's like, AI is still very much a work in progress. And so sometimes we become over reliant on technology. Another great example, when I was a younger guy and we were driving around, you're going to some place you've never been before, you had to like actually use like a map program or a Thomas guide or something, and you're writing down every turn. And today I just tell the lady in my cell phone and it connects to my car and my car tells me where to go. But we are so directionally challenged that I could never find my way back. I didn't learn, I just relied on the technology. And so I think technology has been a double-edged sword. It's moving fast. It's been very helpful. And at the same time, it's also kind of changed the world. And
Mm.
I don't know if it's always for the better. So I played with AI quite a bit, especially in writing, and ultimately it's like, hey, you know what? It's like I like my voice and I like my thinking and my ideas. And so I still use it sometimes and for different things. Love it for some applications, but I think we have to learn how to master technology and decide when to use our intuition and when to use technology. And I don't know how I got off on this tangent, but the point was simply that mentorship from successful people has some value to it that AI simply can't replace, at
It's
least not
AI.
today.
AI is a support system, but in order to have someone that is expert in the industry, it's good to verify it with those people. while AI supports you in, let's say, your finding, right? Because back in the day, we had libraries compared to now, it's just a Google search and Yahoo search. So I don't
Yeah,
think anyone uses Yahoo search anymore, but I think they use like ChatGPT search or something. But
sure.
yeah, there's a lot of support there with AI, and it's having people such as yourself and me in order to guide businesses and companies to pivot towards the next level at a shorter period of time. I would love to continue on this conversation and I would love to pick your brain even further. But what I'm going to say is, those of you who are listening, you got to get his books. I'm going to put it on the description below because a lot of things that Adam has covered today are in the book. I have read them and it has clicked and it has made a lot of sense for me. And it actually opened up a lot of my thinking beyond, when I first started. So as you said, this was a good book as you recommended to start off with. But I'm going to put out his website, his social media links. And if you could follow him and, if you're interested in, what was it you said you had the Empire Builder Academy that you have
Empire
online?
Builder, the book started as Empire Builder, a seminar. 350 PowerPoint slides became a book, which now has become kind of a community.
So if any one of you are interested, I'm going to put everything down below. Let me know. And then, yeah, reach out to Adam, reach out to me, and we're happy to help you in your journey of growth. Other than that, Adam, thank you for your time today. And thank you for sharing all your experience and your stories to all of us.
Well, thank you for having me. Remember out there, look in the mirror and ask yourself, why not you? You can be successful. Good luck to you and God bless.
Absolutely. All right, guys, if you like this episode, please do like, subscribe, and share it to those that you know would benefit from this. Until next time, I'll see you next episode.